Good day everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday the 9th of May 2020, and this is the weekly analysis for spot gold and dollar yen for the second week of May 2020. And as you can see on both charts, both pairs have been consolidating for the last week in a fairly narrow range respectively. Let's start off with spot gold. And as we had already drawn the likelihood of a triangle that could be forming, it stopped right at the upper trend line on Friday and then started to retrace lower back to the 1700 level. So I think we can now shift the attention to this triangle instead of the ascending wedge. So let's mark this up now in bolder lines. Okay, and for now let's remove this center line at the 1700, which also happened to be last week's weekly pivot level. This lower support is still valid, and its upper resistance is definitely valid. That's the high for the year thus far. So we're likely to see this consolidating for perhaps next week, for the most part of next week, before it attempts to break out either further up to retest the year's high or break down from the 21.4 fib level and below the monthly pivot, and there's support, key support at 1650 level, where the daily 55 is as well as the previous upper trend line of a channel. So we'll see if that's going to be in play later on next week if it does drop lower. All right, last week or yesterday the U.S. non-farm payroll report was basically a disaster, which was expected though by the market, and it was slightly less than it was the analysts predicted, but still it was a major impact to the economy with a loss of 20.5 million jobs and an unemployment rate of 14.7%, which is sky high, but a lot of those are also could be temporary job losses. So we'll have to see for the next month's data for May, and see what the impact is as the lockdown eases for most of the US as well. All right, so now we'll focus on the symmetrical triangle that is consolidating in. So unfortunately, it's last week has been just up and down. And let's move on to dollar yen. it has been creeping lower for the week until it found support at this 106 level, and we can probably adjust this to this lower trend line of the descending wedge. The upper trend line is still valid, and this previous support is now going to be resistance, and the 50% fib here is sitting right in the middle of this consolidation. Let's remove that for now. Up ahead is still the key 108 resistance level, and if it does break lower below the 106 and the lower trend line, then it could attempt to target the 105 key support level. Alright, let's move this out for now. But the intermediate support is likely going to be just below the 106. Last week's weekly S2 pivot was at 105.69, so that could be a intermediate support level. Let's mark this one up here. And the weekly pivot last week was at the 106.96, so near the 107 level, which is where this previous support and resistance was. So that's still going to be a resistance area. Right, so unfortunately for last week, both pairs has just been consolidating and in fairly tight ranges. So eventually both will need to break out, and it may be next week or could be even later as this extends further down into an apex, and you will need to break out. And next week there's only a couple of key US news with CPI and retail sales, and very little for the other pairs as well. So it will be mainly updates on the COVID-19 pandemic and any easing of the lockdown worldwide as well as the US, and we'll see whether there's any other key triggers that could trigger a breakout. But for now, it's we can only trade in the ranges, and do be very careful with that. So do take care next week and have a safe week trading as well. And meanwhile, we'll do check out my other videos on Euro, Cable, and Aussie dollar. And cheers for now.